Welcome to the Overflow Mindset Group. We're going to talk more about overflow, of course, and overflow in your life. Hopefully, you're having a lot of overflow in your life. Right now, we're going to talk about a simple method of trading as a strategy, really multi-time frame analysis combined with moving averages and breaker structure in order to determine the direction of the market or determine entries, I guess, within the market. When you're entering the market, you basically want to purchase at a price that is a discounted price. If you're going in a positive or upward direction, you want to enter in a price that's maybe lower, the lowest that it could be, or the one with the least risk or the least downside potential that you can find. So what we're going to do is just take a look at SPY here. Let me pull up the SPY. I'm just going to pull up the daily chart. On the screen, you'll see I have the daily, the 2-hour, and the 15-minute chart. This is for multi-time frame analysis of the SPY. So we're going to start with the daily. Up here, I'm going to expand that, take a look at it. So when you look at the daily chart, you'll see on the SPY, it got up to 479 roughly, and it has been able to break that level. And it has been coming down ever since. But the thing that you'll notice about the way that this is coming down is that it's coming down in movements that are quite controlled, actually. So if we were to draw a line kind of showing some of those movements, we could show maybe a line here. We could show how it's coming up here to this line and it's dropping back down. You could show other breaks here that are occurring as it's moving down, but the main thing that you notice is that it has been moving down. At this point on the daily, we notice that it's actually moving up. At this point, we start to as far as these highs here, and this high here is made even, it's gone beyond that level. So we are moving up on the SPY. We are turning green here on our 50-day moving average. Again, this is the 200-day moving average, but we notice that the price is moving up. So on every time frame, you're going to see the same type of movements where there's pullbacks and there's drops. You know, at this point, looking for market to sort of change direction, we may see a pullback before it continues much higher than where it is right now. But the idea is that the market is actually moving up at this particular point. So when we drill down to a lower time frame, such as this time frame here, which is the 2-hour time frame, you'll see those same areas that I marked out on this particular time frame. So while the market is moving down, you're basically waiting for it to break these counter trend lines, is what we would call these, because they're going against the trend. And when you see those breaks in that counter trend line, you look for your entry going down into a downward fashion, because on this lower time frame, it has to make that same move. It has to start to go down in order for the overall daily to continue to move down. This has to move down. The thing is, we want to know what's the best price in order to get in. So as we look at when price started to move back up, you'll see the same thing. As price starts to go up, if we were to draw counter trend lines, such as this, these counter trend lines would identify when the price started going up again. So we see here, price as it was going down, it started to go up again here. As it went down, it started to go up again here. This would be an area where you would have the most likely least drawdown on an entry for upward movement for price to increase. And that's what you're looking for. So right now we're on an extension of this. The entry for this particular move would have been down here. You know, if you get in down here, of course, you're not going to worry about what happens really here. You're just going to make sure that the direction doesn't change overall. But the idea is that we're continuing to move up. And if we do get a pullback, we'll be looking for the same sort of break to occur. And if that break occurs and you're not in, you could, you know, people could join the trend upward at that particular point. The same thing can be done in terms of breaker structure if you were to draw lines showing the movement to the upside. So if I were to draw here, you see it start to break structure and go down. If I draw here, break structure, it starts to go down. And if we draw a line through here, you know, give it some leeway. But if it breaks structure, then we can consider that it's going to go down for a while. Some folks will get into Fibonacci sequences and other things that you can do to measure the movement that occurs, when you get a pullback. But we really won't go into that right now. We just want to show a simple method of just using counter trend lines to identify what's going on. You're looking for that break in structure, either on a higher time frame or continuation of a certain direction. So we know it's going up on the daily. Anytime that it pulls back, we're going to be looking for another break to go to the upside, because we know at that point we're going to have the least amount of drawdown instead of getting in here at this point, where we had all this drawdown we had to deal with. And the same thing here, we don't know if it's going to continue higher or if it's going to pull back. But if it does pull back, we're going to be looking for a break of that counter trend line that might present itself. So if it does go down from here, not saying that it will, we create some sort of counter trend line. And when it breaks that counter trend line, because we're looking at uptrend, that's when we find that we would have the least amount of drawdown on a stop loss or any sort of drawdown in the trade. So as we look at that, this is true pretty much in all markets, whether you're in crypto or Forex or any other market, the stock market, options. This is one way that some folks trade options, so they would, buy call options here and, enjoy the increase in the price of the call option during this particular move, with the least amount of drawdown that they could possibly plan for. So like if we look at stocks, let's look at some popular stocks. Here we are with Apple. So let's go back to the daily, and we could drop down to the 15 minute in a moment. If we go to the daily here, you notice that the daily was going down. Now the daily is actually moving up. We've known that the daily's been moving up for a moment, but even right here where the 50 EMA changed colors. Hold on a second. Where the 50 EMA changed to green and you got this nice up bar, we know that we're in an uptrend and we're expecting price to move up. But the thing is, let's say we're not in this trade because we weren't dollar cost averaging in or anything else. We're not in this trade. We would then drop down to a lower time frame. We're going to just use the 2 hour as an example. This is that same arrow that was there, and then we would look for pullbacks. And we can simply just draw a counter trend line to show the pullback. We could show the pullback here. And so these are the two that have happened since we've had price move above the 50-day moving average. These are the two pullbacks that we've had. So if you are in on any of those areas, maybe after this candle closes here, and you jump in on this candle, you've seen upward movement with a controlled amount of drawdown. And that's what we're looking for, that we want to get in. We don't want to get in here, say, oh, price is going up. We just want to be in, and then have to wait all this time for price to recover, or get in here and wait all this time for price to recover. We want to get in here. And it's the same thing if we had earlier signs that this was going in an upward motion. So one of the other things that you can do is take that same information and just to make it a little bit more clear down to the 15 minute. So on the 15 minute, you saw that this was maybe a very large candle here, but you can see there are multiple candles that make up this particular move to the downside. Let's see here. So we turned green right about here. And then as you see here, the movement is very, very similar. We're following that trend line down. When that trend line breaks, then we are in. You could probably drop down to the 5 minute and other levels and do the very same thing if you want to get in much sooner. So but the idea is to use a multi-time frame analysis, counter trend lines, and break a structure, because we're saying we're going up. If we're going up, all of a sudden we start going down. Now we're going to be looking to go down. And same thing if we're going up. But overall, if the daily was going up, we've said that this is just simply going up. And even right now, we've made it above the 200-day moving average. We're really looking for this to continue just to go up at this particular point. Again, if it pulls back, that's when you start to draw your counter trend line. But we can look at that on other charts, Amazon. I guess we could look at DraftKings and some of these other ones and look at the very same thing, where you're going to start at the very top. You're going to look at what's happening there. Like we're just starting to show some movement above the 50-day moving average at this point for DraftKings. So our idea is that we expect the price to go up, and we will start to draw our counter trend lines in that fashion, expecting price to go up. So here we would, draw a counter trend line like that. So to get in on this particular part of the trade, we kind of would like to see more movement above the moving average as well, just to confirm that it is going up in the upward direction. But for now, there's some small moves, especially if you're playing options or anything else. These are some small moves that could be made. Let me make this a little bigger, of course, here. So just to give you an idea of where we are. So counter trend line move up, we'll wait and see what happens from here. If we look at Ford, Ford's moving up. It's been up above. Let's look at the daily. Let's just take a look at Ford, because this was 100% move potential on Ford. On the daily, we started to move up above the 50-day moving average, moving toward the 200-day moving average watermark here. And once we know that's in the upward direction on the lower time frame, we're looking for counter trend line breaks. So let's drop down to the 2 hour. On the 2 hour, we're seeing not as many counter trend line breaks, but the very first one that we see really is here, as this started to pull back and push off. Again, we haven't come back to that level because we know it's going up at this point. If we were to go down to an even lower time frame, like the 15-minute time frame, we'll open that up, and you can see that same sort of move there. You could maybe say that, let me mark this out. You can maybe say that this was a move here, similar counter trend. This is a counter trend move. You can get into the smaller moves, and maybe if you go down to the 5-minute, you can even get in a little tighter on this one. This one is going up pretty fast, parabolic movement to it, but it's the same concept. So we can go to GM. Let's go back. Start from the top on GM, and you get the same sort of thing. We're just starting to move above the 50-day moving average, so that's where you're having your change in structure. Prior to that, we've been going down, and we've been looking for downward movement all this time. If we were to draw counter trend lines, you could see we've been looking at down movement. As we start to move up here, we're going to start looking for new counter trend lines that will break to the upside as we pass through certain prices. So if price pulls back, we're looking for a breakthrough. But since it's going up right here on a daily, we drop down to a lower time frame and try to find some of those counter trend line breaks. So let's just drop straight to the 15-minute. And even here, you can see these drops here, and these are kind of trend line entries potential. You can get into these. These are going to be kind of fast moves, so it's really kind of the move has already started for this particular one. But it's the same concept, that this is how you make entries using this particular strategy. So if you have any questions, you can leave them in the comment area, and if you would like to see a particular analysis, we can definitely do that as well. But just to give you some concept of how to analyze the market. Thanks.